Hi traders, in this video we're going to be discussing the tweet that wiped off $14 billion. We're also going to be looking at technical analysis of Tesla right now, along with some fundamental analysis of Tesla and why would Elon even do this? Does it benefit him or does it not? You'll find out in this video. I couldn't help myself, so I had to put in a meme, and it is certainly true that Elon Musk destroyed the share price this week. I'd just like to remind everybody to like, comment down below, and of course subscribe and hit that bell icon if you enjoy our videos and want more daily content about financial markets during this crisis period. So firstly, let's talk about Tesla's share price. So Tesla closed at just under $700 on Friday, and this is the futures contract, so approximately just under $700. From a technical analysis standpoint, we need to think about quite a few things. So we're on the daily time frame here, and we can see the previous highs that happened in January and February at around that $920 to $960 price range. Then what's happened is we've had earnings followed by bearish sentiment that came through with the general market. And then of course, Elon Musk's tweet, which has further fueled a sell-off in Tesla shares. And Tesla is known to be volatile, but whenever Elon does this type of thing, it certainly is interesting to watch. So the price is really pushing down to previous support lines just around this $680 zone. And what we're seeing right now is many different opportunities or many different things that could happen. One of the first things I always like to think of is what could happen in the future. Potentially it bounces off this zone, comes back up, creates some form of head and shoulders, and then breaks through, moving down to around this $550 zone. And that is definitely an opportunity or something that may happen. Remember, as technical analysts or somebody that's looking at it from a technical analyst standpoint, you need to think about it being as chess. And in chess, you want to think about 7 steps forward. So if this is something that happens, we're prepared for it. We know that it could happen like that. Another thing that we want to do is we want to break down price to smaller time frames. And we want to think, okay, well, what is happening here? So here's the 4 hour, and I'm not seeing too much interesting here. And then we go down to the 1 hour, and what we see is a pattern that has emerged and would be very significant in terms of where price would go. So the price has moved down fairly steadily. It's then had a bit of a rebound, and then off the tweet, it's effectively moved down very, very heavily. And this price action here is what we call a flag pattern. So if we bring in a Fibonacci to this level and take the distance of the move, notice the pullback came to the most aggressive Fibonacci, which is the 23.6 level. When the 23.6 level is hit, that's generally not a bad flag, but I do prefer if the flag hits at around 38.2 and the wicks go about as far as to the 50. And I will explain that in further videos as we build this channel and talk about Fibonacci more. But I do prefer that if possible. Now with any good flag pattern, the idea is it goes the range, and that range is then completed again. So if we take that range, complete it again, it comes exactly to $600, which was a previous point where it came down to, previous resistance, previous support, and just underneath it at that 550 was previous resistance over here. So it makes sense that if it breaks through this zone, it will try to fill the next area, and the next area will be all the way from around this 680 down to $600 zone if that was to occur from a technical analysis standpoint. But let's now talk about Elon's tweet in more detail. So here's the tweet that Elon's in trouble for today. Oh wait, it's not this one. It's actually this one. Oh no, it's not even that one. It's actually this one. There we go. So Elon's come out and said Tesla stock price is too high, in my opinion, or IMO in this case. Effectively, as a CEO of any company, it's pretty surprising that he gets away with saying stuff like this time and time again. But as many people are aware, he did get in trouble in 2018 for that previous tweet that I brought up saying secured funding at $420. And the SEC fined him about, I think it was $20 million, and they've put certain caveats on what he can do in the future. So here we have what the SEC actually revealed as a further punishment that it wants Elon Musk to get in the future if he did violate SEC rules. Again, speculation. I'm not sure if he did or not. From the perspective of what this means, he would have a scaling fine. So it would be very interesting to see if they do go down this line. It seems to be that they just want to fine him, and that is really all if they do it. But this is what Elon may be facing regarding the tweet. So the question then remains, why would Elon even make this tweet in the first place? As a CEO of a company, potentially getting in trouble with the SEC and getting fined, it doesn't seem to be very financially viable for him to do this. Now, Elon does have what's called a tranche agreement in terms of his shares and share bonuses that he gets if Tesla does certain milestones over the years. And what a tranche is it's one of several parts of a financial arrangement, payment amount, etc. And this is taken from the Cambridge Dictionary. What is his actual agreement though? Let's take a deeper look into that to understand what he really does have to risk if he makes the wrong decisions and if Tesla doesn't meet the goals that it's meant to meet. So one of the first things that he has is operating milestones, revenue-based milestones throughout the years that Tesla needs to achieve for him to unlock certain monetary milestones. So that's the first thing that Elon needs to do. And you can see the scaling of these milestones over the years. The second one, and probably the more beneficial one to Musk, is actually his compensation plan market cap tranches. So each of the tranche of options, once vested, entitle Musk to buy basically an option of shares. And this case would be 1.688 million shares of Tesla stock price at around $350.02 per share. So what this actually ends up entitling Musk to do is as the share price reaches these goals, he's able to buy the shares at a cheaper price. Let's say he buys them at $350.02. The price of the share, because he hit the bonuses, was $554.80. Then he would be able to effectively have $224.78 per share, making the overall first tranche worth approximately $346 million just to Elon. So you can see how powerful these are for him over time. Why would someone that is earning potentially this much money for hitting these targets want to jeopardize that? And that's the interesting thing about Elon Musk and why so many people love him, because he's prepared to say whatever it takes and whatever he feels like saying, and he doesn't seem to care about some of the ramifications. So look, for all those Elon lovers out there, that's absolutely fine. But it's interesting to think that he is actually financially potentially not going to make as much money for the words that he says on Twitter. And that was the point that I want to bring up with these charts. He has a lot at stake if he needs that money, which of course he doesn't 100% need, but he does have them at stake. The crazy thing about this compensation plan is that he would make $55.8 billion if he was to reach all 12 of these tranches. And that's just how much money is at stake if he was to reach them all. Is it possible? With Elon, you never know. Let's now talk about fundamentals of Tesla at this current share price. So working out fundamentals on Tesla's share price is always really difficult because, of course, if you look at automakers versus Tesla in terms of millions of vehicles delivered last year globally, then you could say, well, Tesla is not doing so well. It's down here producing very little vehicles. And of course, Volkswagen, Toyota, they're producing huge amounts of vehicles. So how can Tesla have such a high valuation? Well, there's much more than just the evaluation of Tesla now. It's obviously about the intellectual property, everything else that Tesla stands for, and all of their market-changing technology. But it's also, you've got to think of it from a perspective of Amazon. So when Amazon first started, did Amazon trade at a profit for many years on the stock market? It continued to reinvest in the business. It actually ran at a loss most years. And some people look at it that way. They look at Tesla being a company that has not earned for a long time or been a bit inconsistent. Obviously, in the previous earnings that just happened, it was earning, but it could be growing into something that will dominate a certain subsection of the industry because it has a current competitive advantage, and many people see it as potentially a monopoly in the electric car business in how great their cars are. And so many people are fanatical about how they love Tesla cars. I know people with Tesla cars and they absolutely love them. That doesn't mean though that the company's evaluation is fair by normal metrics, but it could mean that they could become the next Toyota of electric cars. And that's what some people see Tesla as. So I bring up this chart more to discuss the fact that current evaluation of Tesla is so high when compared to many of its peers. Tesla's market cap evaluation is between 80 billion to 130 billion, depending on the day. But what is happening is that Tesla is overtaking some of the largest car manufacturers in the world. Volkswagen, General Motors, Honda. Tesla has gotten bigger than all of these by market cap size and is only second now to the biggest, which is Toyota. And while it may not take over Toyota in a long time, it's interesting to see how much faith Tesla investors do have in the car company, because that is a massive evaluation and they really believe in the vision that Tesla has. When we look at a chart like this, I guess it makes more sense. We've got Tesla with the Model 3 and just the Model 3, top 20 electric vehicles in the world 2019. So Tesla has that competitive advantage in the new, most likely largest field moving forward over the next coming decades. And it is sold 300,000 cars. It did a great Q1 by many analysts' expectations, and it seems to be the market leader. As I said, so many people love this car. So this chart just shows that they are ahead in their space with a partial kind of monopoly on the space right now in terms of how good their cars are. This doesn't change though that you've got large companies getting into this space. All of those other companies that have been in car manufacturing for decades and decades and decades are coming for them, and they are rising rapidly with agreements and joint agreements and everything going on. So while they are ahead right now, Tesla could be in trouble in the future if they have runaway successes, because they do have amazing supply chains, and that has been a concern for Tesla over the last couple of years. So to summarize, while Tesla's share price may or may not be overvalued fundamentally, it's very difficult to figure out on many metrics, it clearly is a market leader in its field. It also clearly has incredible volatility. So if you're somebody that has that itch to trade an incredibly volatile stock, Tesla is one of those that you could pick. While it's not really for me in terms of trading, price action certainly is playing a big place. And I think that things like moving averages, price action, and reading patterns in Tesla has become a pretty successful technique for a lot of day traders. What's strange about everything that's happening is that Tesla's recent rally actually put Musk on the verge of another $700 million payday, with the 6-month average of Tesla's market capitalization just short of what he has to get, which is a $100 billion target. That would trigger his next vesting tranche, which would give him approximately the ability to buy another 1.69 million shares as part of his 2-year-old pay package. So he's got a lot to risk here, and it just shows time and time again that Elon is prepared to do whatever it takes and whatever he feels like saying, and he really isn't scared of anyone, which some people can think is great, and of course other people may not agree with it. We'll see everybody in a video tomorrow, and remember to like, comment, and subscribe and hit that bell if you enjoy the content that we're pushing out daily during this crisis.